I'm an enrolled agent for the IRS, what's called an EA. And what that means is it's somebody who's gone through the 9 hours of testing and showing that they have knowledge in tax law, and also knowledge and representation of clients, and also knowledge of business tax law. So once you pass that designation, you are required to register every 3 years. You're also required to do at least 30 hours of continuing education credits in tax law, 2 in ethics, every year to keep that designation. And then I'm also registered with the IRS through my PTIN, which is a a preparer identification tax number.
So are you based in Erie?
Yes, I have an office on 1946 West 26th Street. It's right next door to Haggerty's. It's the United Business Center. Myself and another lady who is also a tax preparer, we share an office there under the marketing umbrella of Erie Tax Prep. And I also have a business, a bookkeeping business, so I have some bookkeeping clients. I have tax clients through my own tax business. I also work for the United Way of Erie County for the VITA program. And VITA stands for Volunteer Income Tax Assistance. And that's where you can get taxes prepared for free if you make $54,000 or less. It's generally guaranteed toward, it's geared towards working families that are getting that earned income credit at that level of income. So we do the taxes for free. That way they keep their money instead of going to a box store and paying hundreds of dollars. That would be out of their pocket. And there is 17 sites throughout Erie County for the VITA program, and I'm one of the supervisors. I'm also one of the trainers of the volunteers in tax law. And then I also have a part-time job, 20 hours a week, doing accounting for 6 companies.
Are you busy?
Yeah. During tax season, during tax season, 3 jobs are kicking in. But
Now,
not
do you
so
do
much the rest of the
other
year.
little, like, guest speaking spots like this often?
If I get asked, I will come out and definitely do some guest speaking if people have questions. It's very important that people understand how to avoid tax fraud, how to avoid identity theft, understand what the IRS does as far as that, and give out information, because there's so much misinformation. People start talking to each other, well, I heard this, well, I heard that, and a lot of it's wrong. And then people are doing their own taxes on TurboTax, and they're doing it wrong. So, very important to get correct information.
What are the biggest pitfalls in preparing your own taxes?
The biggest pitfalls is not understanding the tax law. The tax programs ask you a question, but there could be tax law behind it, and sometimes the questions are confusing. You're like, well, should I answer yes or should I answer no? And that's when you start to get into trouble, because now you're guessing when you really have to know. A good instance of that is when you have children and maybe you're living with someone else, and that other person might be supporting your children. The question is, can that other person claim? Well, there are 5 to 6 rules for claiming a child. There has to be a relationship. Is that your son, your daughter, some blood relative? Are you supporting them? Are you providing over 50% of the support for that child? Did the child live with you for over 6 months? So you can see that there's a lot of background rules to know, so that way you don't get into trouble.
Now, if the change in the society, do you see a lot more of that with cohabitation?
Oh, absolutely.
Divorce rates being up and everything?
Right, absolutely. So a lot less married, a lot less people that are married, living together, children in that situation. A lot of the men feel that they can claim the children even if they're not theirs, but they can't because they don't have that relationship rule, which is one of the 5 rules. And so that's a big change that we see.
What are some of the changes in the new tax law that citizens should be aware of?
Well, the Trump law does not apply until 2018. So I'm not fully prepared on all those rules because I'm kind of getting through 2017 right now. This summer, I'll probably be traveling to Washington, D.C. to go to an IRS forum where I'll be studying up on all the new tax laws that Trump has put through. Some of the tax laws are like the doubling of the standard deduction. So for example, married filing joint couple would normally get a $12,000 deduction. Now they're going to get a $24,000 deduction, which sounds like, oh, I'm really going to benefit a lot. But then he took away the exemptions, and every person in the family had a $4,000 exemption. Now that's gone, so maybe it helped you, maybe it didn't. It depends on the size of your family. So there again, you see that there's still, everybody's situation is different and there's different rules, so it's always good to check.
So it sounds like there's a lot of opportunity for misinformation to be
Right.
put out there to the public.
Yes, absolutely.
For senior citizens, what are the biggest issues they face when it comes to filing taxes?
Whether they really have to file or not. Because what I see is sometimes there are tax preparers who are charging seniors to do their tax return and they don't even have to file. If you don't have to file a federal, and some don't have to file federal, state, or local, then you shouldn't be paying somebody to do that. And how you know whether you have to or not is understanding your tax return. Ask your tax preparer, am I paying tax? Because just because you're getting a refund, you might have your annuity withholding money that doesn't even need to be withheld because you don't even owe any tax.
Okay, for example, and that would be people, let's say, collecting Social Security.
Correct.
When you're collecting Social Security, what would be the earned income level you'd have to have before you'd have to start thinking, gee, do I have to file taxes?
Right.
Is there usually like a minimum or something that'll
Right.
push you over the hump?
Well, Social Security tells people that if you're single and you make over 15,000, Social Security starts to get taxed. And when that starts to get taxed, that adds to the income you already have, and now all of a sudden you might end up owing some tax money. But you will generally start having to owe some tax after about a, anywhere from 10 to say $12,000 in income, because it also depends on your age. So I
That's
would say
earned
over
income.
10,000.
I'm sorry,
You
that's
gotta-
earned income, correct?
No, it can be pensions, it
Oh,
can
okay.
be retirement income, it can be annuities, interest from a
But
bank.
but it is income on top of your Social
Oh,
Security.
right, exactly, yep. Well, the main thing is make sure that you get a tax preparer who is ethical and who is knowledgeable. A tax preparer should have a PTIN number, so you ask for that. You should ask for recommendations. Hopefully you got a referral from somebody who was satisfied with their service and has been doing it a few years. You want somebody with experience. You want somebody with a designation, either EA or CPA or an attorney or somebody who this is their, what they do, what they know, what they're studying, what they're keeping up with. Identity theft and fraud, because this is a big problem that's been happening. So what they're doing, the IRS is doing, and tax preparers are doing, is trying to make things more secure. One of the big problems is that people are calling and saying they're the IRS. And they're saying, I'm with the IRS, you owe us money, or they'll make it sound like your grandson owes money, or somebody who's close to you owes money. Now, you immediately get into a panic because you're thinking, if they say your brother or your grandson, you think, well, maybe they do owe money, you know. So then you start to panic and listen to what this person's saying. But the number one thing is IRS will never, ever call you. They do not use the phone to communicate with taxpayers. They only use the mail system. So they also don't send emails. So if you got, if you're on the internet and you keep up with the kids on the emails or whatever, and you get an email saying, that you're in trouble, or somebody in your family's in trouble, through an email, that will never happen either. So the IRS never uses email, they never use the phone, they will only contact you via mail. And even with the mail, some of the fraud that is happening looks like an authentic IRS letter. So you still need to check before you automatically respond. And it's always good to check with somebody who is a tax preparer, somebody who knows the IRS system, somebody who can do a double check for you before you ever respond to anything like that. So that's a big thing. And identity theft, you see it on the news where people are getting their Social Security cards stolen, getting their Social Security numbers taken. So this is another area where you want to keep your information secure. And so I am a big one for shredding. Like my mail, I shred all my mail. Because sometimes you get sent stuff in the mail like, oh, apply for this credit card. Well, then somebody grabs it out of your garbage, somehow finds something else in your garbage that applies to you, and signs up for a credit card. Now all of a sudden you've got a credit card in your name you didn't even know about. So I'm a big one for shredding information. I've probably gone through about 4 shredders in the last 5 years where I've burned them up, because I'm shredding everything. But even old utility bills, stuff like that, I shred them. I don't just throw them in the garbage, and you don't need to keep a lot of that stuff. Some people have boxes and boxes of stuff that they're keeping they don't really need to keep, but you definitely want to shred it. And I don't know if you remember the old movies where the shredders used to shred in long strips, and you'd see them tape the strips together. But the shredders now are much better. They're like the cross-cut ones where they just shred into little tiny pieces, and there's no way anybody could ever piece that together. So that's another good way to protect yourself. So that kind of covers the identity theft and the fraud. Now I'm going to talk about, do you even need to file a tax return? What happens is you go from working your whole life and you think, and you're paying taxes the whole time because you're making income. IRS says you owe taxes. It's all based on different, things going on in your life, how much you end up owing or paying or whatever. So for 30, 40, 50 years you're paying these taxes. Then you finally retire and you're still thinking, I have to pay taxes, I have to pay taxes. But depending on your situation, you may not owe any taxes because Social Security is not taxable. Now I say it's not taxable except because for just about every IRS rule there's an except. So Social Security is not taxable except if you have other income. Now that other income could be pensions. So maybe you work for 50 years, you got a pension from your company. Depending on how big that pension is, that might kick you into owing a little bit of money. Depending on what other income you have. Maybe you have annuities. You kind of put money into investments and things while you were working, knowing that at some point you want to retire and enjoy life, and now you have to take those annuities and you get them into a stream of income, and now that might kick you into something that's a little bit taxable. So that all depends. And then there's that transition year between working and retiring when maybe you quit and you work the first 6 months and then quit, something like that. So then that's a kind of a transition year. You probably still owe tax. But then when you're done working, you're completely done. That first year is that's when you find out, do I really owe or not? So, and that depends on your situation, on whether you would owe or not. So some people, they get bored. They're like, oh, I'm retired from my job from 50 years, but I can't sit home. They go work part-time. So now you've got a part-time job, and any time that you're involving actual earned income, there's actually 3 taxes you have to pay. You have to pay your federal, you have to pay your state, and you have to pay your local. Now, you might not even make enough to pay the federal, but the state says if you owe more than $33 in earned income, interest, whatever it is, you got to pay the state. The local follows whatever the state does. So if you had a part-time job, you made $5,000 for the whole year, not very much, but you still got to pay the state or file with the state and pay the local. So there would be a minimum of 2.
Do you know what the percentage is?
Yes, for the state, it's 0.0307% of whatever your wages are. And for the local, it depends on where you live and work, because City of Erie is higher, it's 0.0118, and most of the other localities are 1%. So,
A little chunk out of your $5,000.
yeah.
Be careful on how many hours you're working, or if it's worth it for you to work.
Well, you're gonna owe the state and the local some kind of paperwork, because the local you'll have to pay, there's no tax forgiveness. In the state, they have what's called tax forgiveness, that if you don't owe them very much, but you still have to file the paperwork. So there's all kinds of little nuances that it's good to know what the law is and what the rule is, and then that way you don't get into any trouble. So, and the other thing with, because I just thought of something about the tax fraud. The other thing to watch out for is tax preparers who are not ethical. Because I just had a client yesterday come to me because she had used somebody else who was not an ethical person and put a bunch of write-offs in their tax return that were not legal. They got caught, they had to pay money to the IRS, they had to pay money to the state. So you've got to also be careful about who you use as a tax preparer. Tax preparers should have a PTIN, which is a Preparer Tax Identification Number, meaning they're registered with the IRS. It's better if they have more knowledge, like an EA, which is enrolled agent, or a CPA, which has an accounting degree. EA is enrolled agent. That means it's somebody who has done the testing, like myself. I'm an enrolled agent. I've gone through the 9 hours of testing with the IRS to prove that I know about tax law. So you want somebody who's knowledgeable and ethical. Okay. So I've kind of gone over whether you might owe or not, and we'll get questions afterwards. And then the final part that I'm going to cover today is the property tax rebate. It's also called the renter's rebate, and I just want to make sure that everybody that's eligible for it gets that money. It is sponsored by the PA Lottery, and what it is you can get from $250 to $600 a year, depending on your income, for either being a property owner and paying property taxes, or for being a renter. Now, there's the income levels that apply. So if you are a property owner, you can make up to $35,000 during the year from pensions, retirement, and they only count half for Social Security. So if you're $35,000 or under, you qualify for the property rebate. And you have to be over age 65 or disabled, or a widow over 50. Then there's the renter's rebate, same thing, but the income levels are lower because you're not paying for a house and stuff like that. So I think it is $9,000 or lower if you make during the year, and that's counting Social Security as half and pensions and annuities as the other part. You make under $9,000 a year, you qualify for that renter's rebate. So I just want to make sure that if you're eligible, or you know a friend that might be eligible, to tell them about it. The AARP is ARP has a free tax preparation, which Amy said is offered here. There is another free tax preparation called Erie Free Taxes. I work for them. That's sponsored by the United Way of Erie County. And, but that program focuses more on working families and trying to help the working families get the earned income credit. And really the ARP is geared more towards seniors. They do more of the property rebates, file your Pennsylvania. With the program I'm with, you have to at least be able to file a federal tax return because we're really focusing on working people that have that earned income. So I've covered a lot of topics, given a few specifics. Do you guys have any questions? Yes.
If you don't wish to pay quarterly, you're fully retired, is there a certain amount that you can pay when taxes come due without getting a penalty for having to owe money to the IRS?
That is an excellent question, because if you owe the IRS less than $1,000 a year, you can just pay them yearly. The only time you have to go to a quarterly would be if you owe more than that, but there's a way to adjust your withholdings. So if you have some of your money taken out during the year, say you get paid like even out of Social Security, have Social Security withhold 20% of whatever your Social Security is, that might be enough. Now, I do tax planning, things like that, if you want to figure out what that is. And how I do that is go into my tax program, we put your information in, and we see at what withholding point do you need to do that so you owe less than $1,000.
Can you deduct your Medicare and your insurance payments? Is that deductible from your taxes?
That is, but that's deductible on a Schedule A. So the IRS gives you, and that's a great question, IRS gives you two ways to deduct from your taxable income. One way is the standard deduction, which for married filing joint this year is $12,600. And then the other way that you can deduct is the standard deduction or itemized deductions. You can't do both, but you can do one or the other. If you were married filing joint, your itemized deductions, you would want them to be more than the $12,600 to get the most bang for your buck. Otherwise, you would go with the standard. Now, the itemized deductions includes mortgage interest, it includes medical expenses, it includes charitable contributions. So it depends on which way is going to be more advantageous for you. And the big problem with medical is that, and this is where we really need tax reform, is that the medical is subject to 10% of your AGI. And what that means is that, say you made $50,000 that year, that tax year, $5,000 of your medical you would not be able to claim on that Schedule A, only after $5,000. So that means if you're really filing that Schedule A, you got a lot of medical bills. You were probably in the hospital. You know, you went through a lot that year. And then what happens is most seniors have their houses paid off. And so you don't have that high mortgage interest, which helps kind of kick in. And you're not paying the state and local taxes, which is something else kicks into itemized. So a lot of things make up that itemized, but you know, is your standard deduction higher? That's the question. So that's something else you'd have to look at. My name is Tracy Burnside. I'm with BBB Burnside Tax Service. I also have a bookkeeping service, and I'm under the umbrella Erie Tax Prep, and we do have a web page you can check out, which also gives you the a general idea of what we charge for tax preparation.
Do you have a phone number or email address?
Phone number is 814-490-4667, And my email address is my name, Tracy, Tracy, .a.burnside @gmail.com.